in the last 4 years. It's an issue our next guest feels quite strongly about. Jeff Tory is chairman, partner, and portfolio manager at Pembroke Management, and he joins us here in studio. Jeff, it's nice to see you.
Yes, glad to be here.
I mean, numbers are always helpful, or data points are always helpful, and that's a pretty long list of companies that you had been looking at and compiling.
Yes, I obviously, as I said, you feel very strongly about it. You made a good point that there is this sort of short-term hit, the endorphin pleasure of getting a premium, and the shareholders are happy, and as you said, often the management teams are happy. But if you think about some of these takeovers, if it was sort of premature in the company's life cycle, and we might get to a couple of examples, then there's the sort of loss of the long-term opportunity for, I even want to call it socialization of wealth, as they grow into very successful, long-term Canadian success stories, if you want to look at it that way.
And is it because of the price at which they're being acquired, which on the day might be a nice premium, but the fact that there is that premium story means that it was hard to unlock the value in the public market?
I think the price, I would never say that the prices weren't fair in the short term, but I think the real, question is why are these companies choosing to, go public? And if you look at the class of 21, a bunch of companies came public, particularly in the tech sector, but they came public at very high valuations. Then there was call it investor disappointment, as in 2022, there was sort of the tech meltdown, which you remember. And so then a lot of the companies fell to, lower valuations, which left them vulnerable either for management frustration with the share price or outsiders showing interest. And so it isn't that the premiums were fair in the context of the share price at the time, but the question was, are we then sort of robbing Canadian investors of the future, or as these companies, legitimate reasons why they go?
Yeah. And we are getting to the mechanics of what happens in the markets, but at the end of the day, the big takeaway here is, in your opinion, Canadian investors are left with fewer options for investing.
And there's no question that over the years the fishing pond has been shrinking. And then one of the issues is IPO activity in Canada is very cyclical, and then sometimes it's very fatty. And so what will happen is a sector will get great sponsorship. You can think of the cannabis sector being an example. Huge amounts of capital get raised, but it wasn't exactly the best outcome for investors. And so then you don't then end up with this long-term growth of the underlying, pool of companies. That's in essence lots of takeovers and then a low flow. Last year there was one IPO, I think, in 2023, and that's people have been talking about that.
But you're an investor. You're putting a lot of time into sort of assessing a behavior in the market, because you're trying to find ways to invest in great Canadian companies for the future?
Yeah, we're trying to. If you look at, if you think of the Canadian market, there's been, and I know there's been discussions in the last month or so about lack of investment in Canada. If you look at the Canadian market over many, many years, it's been a great stock market. And then if you think of some of the brands that have been birthed over the years, some of the names, whether it's Thompson, you can go down the great companies that have Constellation Software, they've been wonderful companies. Well, what I'm concerned about is to make sure that the underlying interest in capital formation happens so that the next generation of great companies have an audience, and that they have time to find that audience.
What would be a couple of suggestions you would have to fix things?
Well, one of the things, I don't think you can actually tell people, moral suasion maybe, but I don't think you can actually tell the large pools of capital what to do. And the change in market structure over multiple decades has definitely narrowed the audience for smaller to medium-sized companies. There's no question. And so then, is there a way to promote capital formation in Canada, entrepreneurship, the whole. We met with one company yesterday in Montreal at a conference, and their lament was that they're a unique company in Canada with only, there's no industry to compare them to. So then for the average investor, it becomes a lot more difficult to benchmark that company against progress, where it should be, valuation, et cetera. So then that gives you a little sort of insight into why some of these Canadian companies have trouble finding the optimal sort of public market valuation, if you want to call it that. And then that's what leads to the selling out.
Let me ask the question another way, because I think if you didn't have let's say, exchange options elsewhere, that might not be a consideration for that younger Canadian company, but they can. They can if they think that there's a bigger peer group on, say, a U.S. exchange. Theoretically, if they've got the opportunity to go public, they could go public in the U.S. versus Canada. But I guess we do have, from time to time, some examples of companies that go and do that, and then they feel like maybe that wasn't the best way to go too. So
yeah, because there's cost associated with that, and then sometimes this, if you want to call it like a valuation arbitrage going from Canada to the U.S. market, it works, but it works if the company's in a virtuous cycle, because it can't be just based on seeking an audience that has a different valuation framework. It has to be because you think there's a 20-year growth opportunity, and then so you're right. And then Canada has also been very welcoming exchange. If you think of crypto, Canada's historically been a great mining market in terms of welcoming others to Canada. But it's more, how are we going to stimulate ongoing capital formation for all these great domestic entrepreneurs? And then one thing that's for sure in the last 20 years is that there's pockets of IP that have emerged in Canada, whether it's in southwestern Ontario, that would have been spurred a bit by BlackBerry, the success of RIM. In Western Canada, you've been seeing, whether it's in pharma or tech, Montreal has obviously AI and biotech.
Yeah.
And so then the question is, how do we help those companies get from early stage capital formation, VC, PE backing, to then a successful public market journey, if you want to call it that, which can then, if you think about it, socialize the wealth among all Canadian investors. Because if you think of a few of the examples I gave you, well, all three were purchased by American companies. And so then that growth and wealth creation will be in the hands of USPE or VC or strategics.
These are Magnet Forensics,
As
for
an
example, and
yeah.
H2O and Points.com.
Points.com's story was an interesting one, and this is back to, was it sold too soon? They obviously were hurt by the pandemic significantly because they're in the travel loyalty revenue enhancement business, if you want to call it that. And so then they did very well coming out of the pandemic as people started to travel again. And then it was a company that had a long journey as a public company. The numbers were good, and then a strategic combination with Plusgrade in Quebec, but they sold at a nice premium. So back to your question to me, yes, happiness around the premium. That interest got resold to General Atlantic Partners a couple of weeks ago at double the price, the combined entity that was paid in 2021. So it shows you, or 2022, I think it was.
We're almost out of time, but we had a conversation with the former head of the Ontario Teachers Pension Plan, Jim Leach, earlier, because there's been this, you alluded to it earlier, but you had CEOs sign a letter, say, hey, Ottawa, maybe the Canadian pension fund should invest more here at home. It's kind of a separate matter, because usually they're taking companies private, but they can also be early stage investors as well. But his comment on, he felt like some of those CEOs were almost misled in signing that letter, arguing that most of them, in his opinion, actually have access to a healthy amount of capital. How do you feel about the capital pool that is available for big public companies?
Well, I think there is no problem for the large companies. And then as markets have evolved over the years, and you think of the role of the pension funds, whether it's in the private debt markets, like the level of sophistication they've brought to the financing process has helped the Canadian markets. It's just that it's been harder in the last decade for smaller companies to find their audience and find capital, no question.
And to your point, like if you're an early public investor in that, the wealth starts to make its way through the rest of the economy.
That's it. And it's different. You can argue that you shouldn't be telling adult investors what to do. I'm talking about the large pension funds, but moral suasion in terms of, is it good for the Canadian economy? No one questions that.
Yeah.